Take a good look at that building just over my shoulder. You'll notice we're filming from quite a far away, and that's not by choice because the security measures around this unmarked facility are so strict, we can't even get within 500 feet of the entrance. No cameras allowed, no visitors permitted, no exceptions. There are no signs, there are no logos, there's nothing there to reveal what's actually happening inside those walls, and yet the work being done in that heavily guarded facility could spark the biggest technological leap in a generation. Some say bigger than the internet boom. Trillions of dollars in potential are swirling around this secretive place, but it's all deliberately kept off the radar. Until now. For years, researchers in this nondescript, highly secured facility have been pushing the boundaries of next-level innovation, something so advanced, it has the potential to upend entire industries, the way you and I live, the way we work, the way we play, even how we tackle some of humanity's toughest challenges. This next wave of computing power will completely redefine what's possible in finance, medicine, AI, you name it. And it all fits on a chip about the size of a postage stamp. Inside these walls, breakthroughs are happening that almost sound like science fiction. We're talking about the kind of technology that, if fully realized, could accelerate our digital world by light years overnight. It's going to increase our computational power by more than 10 million fold. I mean, that's like taking a car from 65 miles per hour to 650 million miles per hour. It's the speed of light. The mind-blowing function will make today's most advanced supercomputers look like fossils. And the money flowing into this sector, let's just say the investors chasing this opportunity aren't talking in millions or even billions. They're talking in trillions. The buzz about what's happening here has quietly circulated among certain power players on Wall Street. In fact, one living legend, one of the most respected market visionaries in modern finance, has gone on record saying that this small, largely unknown outfit could become the next Nvidia. That's some serious praise for a company most people have never even heard of. So, what is the real story? And who is this living legend who believes this silent powerhouse is poised to disrupt industries far and wide? Join me inside our studio. I'm about to sit down with him, and he's going to open the doors to this groundbreaking operation and reveal the name behind this unmarked building and explain why he believes it could be one of the most important opportunities of the decade. So stay tuned, because what you're about to hear can not only change the way you think about investing, but also set you up for life-changing gains. Let's head inside and get started. Hello, everyone, and welcome to the next NVIDIA, The Big Reveal, an event that is shaping up to be the most talked about financial broadcast of 2025. I'm your host, Chris Hurt. Glad to have you with us. Tonight, we are here to tackle one burning question. Is there another NVIDIA lurking in the stock market shadows? And if so, who is it? Well, we couldn't have a better guest to help us answer that question than the man sitting to my left right now. He's a 40-year Wall Street veteran, creator of one of Wall Street's most widely followed stock ranking systems, and legendary for spotting industry-dominating companies very early on, including Microsoft, Apple, Google, Dell, and yes, the stock that everyone wishes they bought more of recently, Nvidia. He's rung the opening bell at the New York Stock Exchange. He has been hailed as one of the most important money managers of our time. And he's a go-to resource for Forbes, CNBC, Fox Business, Bloomberg, the Wall Street Journal, and a whole lot more. Ladies and gentlemen, the one and only Louis Navellier. Louis, thank you very much for joining us. It's an honor.
It's great to be here, Chris. I'm excited to share what I believe is going to be one of the biggest untold stories in the market right now.
Exactly. And I want to dive into that. Let me just start by mentioning that phrase, the term, the next NVIDIA. I know that gets tossed around a lot these days. And usually I'd probably be skeptical about using that phrase unless the person saying it is you, because your track record is amazing. It speaks for itself. Let me go through a couple things here. You've been called the analyst who recommended Google first, all the way back in 2005, only months after its IPO, and anyone who followed you at that time and held on would have seen gains of over 2,300%. And then in 2016, you told the world that Nvidia was your number one rated tech stock. Now, it was trading at that time for around $1. Today, it's about $130. That's a 7,394% leap.
You know, it's wild to think about it now, but back then almost nobody recognized Nvidia's potential. My system, however, saw it right away.
Exactly. We're going to talk about that. And let me just keep going here because the same could be said for your call on Dell at 51 cents a share back in 1990. Later, it was crowned the best performing stock of the decade. Or your call of Microsoft at 38 cents. The Evening Standard even called you the one who found it long before most other money managers. You also found Apple at 37 cents, Intel at $3, and Oracle at 51 cents. So no exaggeration here to say that you are the man. I mean, you find needles in the stock market haystack. Really?
I appreciate the kind words, but let's set the past aside. What truly matters is what's coming next. And I believe we're on the cusp of something even more explosive than Nvidia. And I'm talking about a quiet, under the radar opportunity that could redefine an entire industry, maybe even multiple industries. There's a new wave in technology brewing that could eclipse the AI boom we've seen so far. At the center of it is a small chip maker that's poised to become the indispensable supplier, the one every major player will need for this next revolution. And that's what I want to reveal here today. If there's any stock out there that's the next Nvidia, this is it. I'm going to give you the name and ticker symbol in just a minute. I feel this way because the exact same signals my system detected in Nvidia years ago are flashing again for this company. And once Wall Street catches on, I predict a stampede into the shares. In my view, this stock could match or even surpass Nvidia's rise. It has the potential to become the next household name in tech.
Which is absolutely thrilling news. It could match or surpass, is what you just said. And I want to understand correctly here, you are actually going to reveal the name and ticker symbol of this amazing pick tonight. The one that you are calling, Louis Navellier, is calling the next Nvidia.
Yes, I am. I'll lay it all on the table during this broadcast because time is really of the essence. Every day, I'm seeing new signs the big institutional money is moving in. The people who act first stand to benefit the most before everyone else piles in.
Right. I just want to make sure that everybody understands this is significant because most people only dream of being early on a stock like Nvidia. Tonight, you're handing us a chance on a silver platter to do that. Now, I have to ask you why. Why share something that's so valuable? This is the kind of high-level information that I know your Wall Street clients have paid you tens of thousands of dollars for. What's going on here?
That's a great question. And the answer is, for well over the last decade and a half now, I've become aware of what I can only call a retirement crisis across America. Most people simply haven't put away enough money to be secure in retirement, let alone to be prosperous. In my opinion, the stock market is still the greatest place in the world to build enormous wealth if you know how to find the right stocks before institutional money piles in. I've spent my career helping the wealthy grow even wealthier. All too often, everyday folks get boxed out of those big Wall Street winners. They're left with just table scraps. The stock market doesn't care about your background or your credentials. If you have access to the right information, you can jump on the same opportunities the big guys do. That's what my message today is about. I want to level the playing field. It's about giving you everything you need to capitalize on the next big revolution in technology. And I can't wait to share it.
Well, that's great news. You're on our side. And if history is any indication, Louis, then this one stock that you're going to be sharing tonight, that one stock itself could be a bright spot in many people's lives. I mean, if it performs just half, even 1/10 as well as your original NVIDIA, Microsoft, or Google recommendations, we're going to be looking at some very impressive gains, very exciting stuff. You've also, I know, promised to share some never before revealed, let's call them insights into how your system finds these big potential winners, right?
That's correct. As the saying goes, I don't just want to give you a fish. I want to teach you to be a fisherman.
Right.
That's why tonight you're going to hear me reveal aspects of my system I've never talked about publicly before. My goal is to help our viewers understand how they can leverage the power of the stock market in ways they probably never considered before.
Okay, so all of that is still to come, but you know what, let's start right there, because your ability to really zero in on these potential winners so early is unlike anything I've ever seen in the industry. I know you've hinted that your system's real power lies in pinpointing where the big institutional money is going to go before it gets there. And I know just before we went live here on camera, you actually mentioned an incredible example that perfectly explains the power of that system. Would you mind sharing that with the viewers now?
Absolutely. Let's roll back to mid 2021. The entire stock market was in a frenzy. Crypto was going berserk. Tech stocks were hitting the stratosphere, and hype around NFTs was off the charts. Everywhere you looked, people were convinced that blockchain assets were the future. But my system started flagging something entirely different, a stock in the oil sector.
Right. Oil wasn't exactly fashionable back then, right?
Exactly. Oil was practically a dirty word. Between electric vehicle hype and climate concerns, everyone assumed the best days for petroleum were behind us. But here's the thing. My system doesn't care about narratives. It just cares about numbers. And in the data, something huge was brewing for a little mentioned oil stock, namely Occidental Petroleum.
Which is amazing. Occidental Petroleum. It's such a weird left turn away from things like cryptocurrency and biotech, right?
It caught a lot of people off guard, but institutional buying signals were popping up like crazy. At the time, Occidental was trading for a fraction of what it would eventually reach. Every single marker that my system looks for, earnings drivers, cash flow potential, you name it, was flashing big time.
Mm-hmm.
So while everyone else was pouring money into tech and meme stocks, my system was pulling me towards this off-the-radar energy play.
And then, of course, the big news came a few months later, right?
Oh yes, Warren Buffett, arguably the most famous investor on the planet, announced he was making a massive purchase of Occidental. Suddenly, headlines and analysts went wild with Buffett's big bet on Oxy. It turned out to be one of the highest profile buys in years, and the stock soared.
Exactly. So in a year when most investors saw their portfolios shrink, Occidental ended up the top performing stock of 2022.
And it's not just that the stock soared, it's that it soared in the worst market conditions. That's when you truly appreciate the power of data over hype. Nothing beats seeing cold, hard metrics light up on a stock nobody else is even mentioning, and then watching the world's greatest investor confirm it months later. That's what I want viewers to understand. Emotional hype can cloud your judgment, but real data will never lie.
Right. And that's a recurring theme that we're going to touch on throughout the rest of our discussion here. When you trust the data instead of the hype, you can make some moves that even legendary investors like Warren Buffett haven't really fully revealed yet, and then ride that huge wave to success.
Yes, and that's the real secret of my life's work.
Mm-hmm.
Put simply, if you want to achieve significant success in the stock market, you've got to look at the one data point that matters most, and that's the activity of institutional investors. Institutional investors are the real movers of stock prices.
Right. And by that, we mean these are the institutions and hedge funds that have billions of dollars, maybe even trillions to invest, right?
Yeah. And when they decide to buy a stock, they don't just buy a little, they buy a lot. And that's what moves the price.
Right. So when they start buying, it's like a tidal wave.
There's no greater path to wealth than investing in undiscovered stock before the smart money moves in.
Right. And that data-driven approach is how you consistently stay ahead of the crowd?
It is. And here's the key. Institutional investors, hedge funds, and legends like Warren Buffett aren't just throwing darts at random stocks.
Right.
They're all looking for very specific qualities.
Right. So what kind of qualities are we talking about specifically?
They look for very specific rates of earnings growth, margin expansion. They're eyeing up earnings revisions, stocks in a certain market cap range, not too big, not too small, and enough trading liquidity so they can take a meaningful position without moving the market too much.
Mm-hmm. So it's pretty calculated.
Oh, it's incredibly calculated. Those investors are looking for stocks that can rise at least 500%, maybe even 1,000% or more. And when they find stocks that fit this profile, they don't just buy a little, they buy in bulk,
Hmm.
plowing billions into them over sustained periods of time. That's when you see market values shoot up fivefold, tenfold, even 50-fold.
So you're saying these stocks all share the same characteristics?
They really do. I saw this over and over during my time on Wall Street. It got to the point where it became very predictable. Professional investors would gravitate towards stocks with the same statistical profiles repeatedly.
Right. And you've built your system around that.
Yes.
Okay.
I started monitoring thousands of stocks and their key metrics, looking for patterns. My edge is that I've trained my system to know what Wall Street will buy before even they know it themselves.
I don't want to challenge you, but I have to ask this because what you just said is a very bold claim. How can you be so sure that you're ahead of them, so to speak?
Because I've been doing this for decades and the data doesn't lie. I know the specific qualities institutional investors can't resist. When I see a stock that checks all those boxes, I know it's only a matter of time before the big money flows in. And where the real fireworks happen is when these institutional investors aim their fire hoses towards an under-the-radar stock. Let me show you a perfect example.
Okay.
This is the 20-year stock performance of a little juice and soda company that popped up on my radar a few years back.
A juice and soda company. It does not sound like a game changer.
That's exactly what most people thought. At first glance, there was nothing remarkable about it. The company had gone public in the 1980s, but achieved no real growth since then. It had a line of soft drinks and juices, but nothing that stood out.
Right. So it's a stock destined for mediocrity.
That's what it sure looked like on the surface. To make matters worse, the company was being completely overshadowed by industry giants like Coke and Pepsi. No one on Wall Street wanted anything to do with it.
So why did it pop up on your radar?
Beneath the surface, the data was painting a very different picture. My system started detecting subtle but critical changes in the business. It showed signs that large amounts of institutional money were about to flow into the stock. It wasn't on the big money's radar yet, but the metrics were clear. This company had all the hallmarks the smart money looks for before they pile in.
Right. Meaning the big players, the ones who actually move stock prices.
Exactly. My system flagged the hidden markers that signaled this company had the potential to become the next big superstar. And it immediately shot up to the top of my list.
And what happened next?
Everything the data predicted started to happen. The company began showing consistent revenue and earnings growth, healthy profit margins, and positive cash flow, and it even launched a hit product.
A hit product?
Oh, yes. It started eating into the market share of Coke and Pepsi, something almost no one thought possible. And by the time the market caught on, the stock had achieved one of the greatest performances of all time.
Right. It's kind of hard to believe. I mean, looking at how unremarkable it seemed, at least in the beginning.
It's true. Business Insider eventually named it the stock of the century. But back in 2004, when my system flagged it, it was flying completely under the radar.
Well, I'm guessing you're going to tell us the name of this mysterious company.
I am. Want to take a stab at it first?
Oh, I was afraid you were going to ask me that. It's a drink company that went public in the 1980s, you said, and became a huge success. The only one that pops into my head is Snapple? Red Bull.
Good guesses, but no. The company was called Hansen Natural at the time.
Hansen Natural. I never heard of it.
You probably know it by its current name, Monster Beverage.
Monster. Yes, the energy drink company.
That's right. My system found it when it was so off the radar, it wasn't even called Monster yet.
That's incredible. You spotted that before most people even knew what it was.
Over the long term, shares surged more than 500-fold after my initial recommendation, as huge institutional investors like Vanguard, BlackRock, JP Morgan, State Street poured into the shares. That's the power of understanding the most important data point. institutional behavior.
Right. Yeah, and that is the ultimate edge, I suppose, isn't it? Getting in before the big players pile in.
Exactly. I mean, if you knew some of the biggest banks and hedge funds were about to invest billions into a tiny, unheard of drink company, you'd want to get your money there first.
Right. And once that happens, it's game over for everybody else, right?
Pretty much. By the time the general public catches on, the big institutions have already driven the stock's price way up. That's why the little guy almost always gets left fighting for table scraps. My job is to get there first before the stampede begins.
Right. But how exactly do you find those stocks, Louis, before Wall Street piles in? How do you know?
That's where my proprietary grading system comes in. It evaluates over 6,000 stocks, looking for the specific qualities that institutional investors consistently seek. My system constantly crawls through the masses of stock data, looking for these very special, very rare key performance markers. Profiling the companies that appear on the verge of attracting the smart money. Based on these factors, each stock gets a grade. A stock with an A grade means institutional demand will likely be very strong. A stock with a B grade is still strong, but is not as powerful as an A grade. A C graded stock, neutral. All the way down to the D's and F graded stocks where we see complete and utter avoidance.
That seems remarkably simple. And an A grade stock is where the magic happens.
Absolutely. A small or unknown stock with an A grade means the data shows big money is likely to start flowing in. So when that happens, the stock price often skyrockets.
Right. I have to mention one stock that caught my eye recently, probably a lot of people too, AppLovin. That one has been on a tear lately, right?
AppLovin is a great example. They use AI to help app makers reach more users and ultimately make more money. It went public in 2021, but initially received low grades in my system, C's, D's, and F's. That told me institutional investors weren't interested at the time.
Right. So it wasn't worth considering then.
Not yet. The company was still working a few things out. But in late 2023, all that began to change. The stock improved to a B and then to an A grade. This is the critical change my system is designed to catch. When the stock was up to a B, it's like watching Wall Street start to eye up the opportunity.
Right. So after AppLovin became a B, things began to change.
That signaled the smart money was ready to pounce. Then it happened. The floodgates opened. Big institutions started buying AppLovin in massive quantities. Major institutions such as GQG, State Street, Wellrock, and Bridgewater collectively added tens of millions of shares to their AppLovin holdings beginning in 2023. GQG, for one, acquired 10 million shares. State Street increased its position to over 5 million shares. T. Rowe Price added 3.9 million shares, upping its previous stake by 314%. Fidelity increased its holdings by 622%.
Wow. So they all converged at the same time.
No kidding. See, when the big players start buying a small stock like AppLovin, something magical happens. First off, it creates huge demand, and demand drives prices up. But here's the interesting part. In the stock market, demand tends to create more demand. It's like a domino effect. When one institution starts buying, others take notice. They start asking, what do they see that we don't?
Right.
Suddenly, it's not just one player buying. It becomes a chain reaction as more institutions pile in.
Right. So it's not just about the initial buying, it's the reaction that can trigger.
Yes. And there's another layer to it. For smaller companies, institutional buying creates visibility.
Right.
These stocks often struggle to get attention. But when big money moves in, analysts start writing research reports. The stock gets mentioned on financial shows. And suddenly, what was once an unknown company is part of the mainstream conversation.
Right. So it's not just moving the stock price, it's changing how the company is perceived.
That's exactly right.
Okay.
Institutional buying isn't just about price. It's a stamp of approval. It says to the world, this company is worth watching. And that validation often leads to even more buying. So when you see the smart money moving into a small stock, it's the ultimate signal. It's not just driving prices, it's reshaping the entire investment story.
Right. And that's what happened with AppLovin.
Big time.
Okay.
Once the floodgates opened, there was no turning back. Demand overwhelmed supply, and the stock's value surged almost overnight. Today, it's an institutional darling. Wall Street owns a whopping 62% of AppLovin shares.
Wow.
In just over a year, it's driven the stock up by as much as 836%. From a struggling new IPO to one of the market's standout performers, all thanks to the frenzy of institutional buying that my system was trained to find early.
Which it's incredible. And your system actually caught all of this by detecting that key change in the grade, right?
Yes, it did, Chris. When you see a stock move from a C or a D to an A, it's like watching the market whisper, get ready, this one's next. By identifying these transitions, you can position yourself ahead of the big money, which is where the real profits are made. Vertiv is another great example. They manufacture equipment and systems essential for AI data centers, a classic pick and shovels play in the AI sector. Initially, my system assigned it grades like C's and D's, indicating minimal institutional interest.
So again, just like the other, at first it wasn't attracting a lot of attention from the big players.
Exactly. You can see how the stock was essentially going nowhere. But then in February 2023, my system detected a major shift in Wall Street sentiment. Vertiv's grades were improving to B's and A's, signaling that institutional investors were starting to take notice. Following this upgrade, Vertiv experienced a massive wave of institutional attention. Fidelity led the way with a mammoth purchase of 45 million shares. BlackRock followed suit with 2.9 million shares. Wellington, 2.8 million shares. Bank of America, 2.3 million shares. Jensen bought 4.5 million shares, upping its stake by more than 100-fold.
Holy smokes.
See how demand creates more demand?
Right.
The surge in institutional buying propelled Vertiv to new highs. The stock has surged 785% since the upgrade, rivaling even Nvidia's performance during the same period. Meanwhile, the broader investment community didn't learn about Vertiv until it was too late.
Right. You know, most people, I think, Louis, would probably hear this and they might think to themselves, yeah, whoa, finding stocks like this is just, it's, dumb luck, pure luck. I mean, I think I could even think that on some level, but again, I have to keep reminding myself, this is Louis Navellier. You're the one that's been doing this for your entire, 45, 46-year career. So at some point, we have to stop and realize that it's not luck. It's undeniable proof that your system works.
That's exactly right, Chris. If you want to win in the stock market, you have to know where the big money is going and why. Because the simple truth is there's one thing that actually moves stock prices, and that's more people wanting to buy.
Right.
Nothing else really matters. More buyers mean higher prices, period. It's how we uncovered Booking Holdings, Priceline's parent company, before its meteoric rise, Amazon, Netflix, and Nvidia. Once you realize this fact and learn how to find stocks that are attracting more of the right kind of buyers, the rest falls into place.
Yeah, clearly it does. Now, I imagine all of this, we're going to circle back here. This is leading us back to the big prediction that you're going to make here today, right?
Yes. The same methods I used to find Google, Dell, Nvidia, Monster, and others early on are now in play for another off-the-radar stock, which I'm going to reveal for free right here. Just a few months ago, this stock wasn't even on most investors' radars. It was grading a D, and underperformed by almost every metric. But I kept my eye on it because I saw potential in the fundamentals, even when others didn't. Fast forward to today, and it's surged up to a strong B rating. Why? A massive spike in the critical factors Wall Street salivates over. We're talking triple-digit sales growth, something no one expected, and key improvements to operating margins. And here's the kicker. Institutional investors are starting to quietly build positions, which is exactly the kind of activity that precedes the big moves. I've seen this pattern before. It's the calm before the storm. And if you can get in now, before it jumps onto everyone's radar, the potential upside could be huge. This is a perfect example of how a stock can go from overlooked to a darling of Wall Street in just the blink of an eye. Not only that, this stock is at the center of a massive new technology boom that's just getting underway. We could quite literally see dozens of additional opportunities for huge gains in the coming months.
Right. Very exciting and incredible. And that announcement that Louis is going to make, the next Nvidia, is coming up in just a few minutes here. So, Louis, you have taken something, if I think about this, you've taken something as complex as institutional buying, right? Over my head, but you've made it so accessible with this very simple grading system that you just explained.
That's the idea. The stock market might seem chaotic, but there's a method to the madness.
Right. Well, Louis, the success of your stock picking system speaks for itself. I mean, you've created what is arguably the most successful stock predictor in Wall Street history. And I know it's long been the preferred choice for institutional funds and managers as well. They often white label it, right? These firms will use your system and then present its achievements as their own. I mean, a lot of people probably don't know that. And we can't name names for confidentiality reasons, but there are some very heavy hitters on your client list. So with something so loved, something that's so respected by all, I guess I have to ask you, how did you think to create this? What's the story behind the story here? Can you share that?
Well, the idea originally came to me back when I was in college at Cal State Hayward. I was working on a project with two of my professors who also happened to be executives at Wells Fargo.
Oh.
This was during the pre-PC era, and Wells Fargo was one of the few institutions experimenting with examining stocks on mainframe computers. They were trying to create one of the first index funds, and because I was good at math and technology, they chose me to help.
Yeah, so you were essentially part of history in the making.
Yes, but here's the twist. My task was to create a fund that matched the market's performance. It seemed straightforward, but as I dug in, I realized how difficult it was to do.
And why was that?
Because of outlier stocks. Those few companies that would soar in price and skew the market's average. Those stocks weren't just outperforming, they were carrying the entire market. It got me thinking, what if I could learn how to identify those stocks before they took off?
Right. And that's when the idea for your system was born?
Exactly. I became obsessed. I spent countless hours crunching numbers, reverse engineering the biggest winners, and experimenting. I wanted to build the ultimate model, a model of what the big money's ideal stock looks like. You've got to understand, almost no one else was doing that kind of work back then. Because I had early access to powerful mainframe computers, I had a huge advantage over just about everyone else.
Right. Well, that's the edge you created for yourself.
It is. Eventually, my research led me to 8 individual factors that have the most predictive power in determining whether a stock will attract institutional buying pressure.
Okay, so hold on. That's astonishing to me. Of all the metrics and all the things that go into doing this thing, you narrowed it down to 8. What are those markers, those 8 markers?
They include things like sales and earnings growth, earnings momentum, return on equity, and free cash flow. Together, these 8 metrics form a composite grade. The higher each individual metric, the higher the composite grade. When all 8 metrics hit proprietary thresholds, a stock receives an A grade. It's achieved that status that the elephants on Wall Street find very attractive, a sign that they're about to pile into the stock.
Right. So this system is essentially predicting, and maybe you said this earlier, it's essentially predicting Wall Street's behavior before it even happens.
Exactly. My goal was to identify the statistical profile of the stocks institutional investors can't resist, and then buy them first. And I've done just that, decade after decade. Whether it was Microsoft, Nike, or Apple in the 1980s, Dell, Walmart, or Oracle in the 1990s, and Amazon, Google, or Netflix in the 2000s, The results speak for themselves. It's all about spotting the winners before they break out.
Yeah, I'm just listening to you run off that list. It's such an impressive track record. And after hearing all of those remarkable wins, I'm curious, how do you even begin? Help us understand the nuts and bolts of your method. How does it actually go about evaluating each company's growth prospects?
Sure, let's take a look at Celsius Holdings as an example.
Okay.
Classic example of a big winner that came from nowhere. Early on, things weren't going too well for the business. Its profile was unimpressive to say the least. Lots of F's in the data.
Yeah, I can see that here. No sales growth, no earnings growth, bad operating margin. So not an impressive profile. And I assume Wall Street was not interested.
No way. The overall grade was a D. But in 2020, things began to change for the company. Celsius started exhibiting the traits that institutional investors look for: stronger sales growth, improving margins, and positive earnings revisions, among others.
Which means the grade changed.
That's right. And that's the important part. Identifying that shift early on is incredibly important. The increase in grade meant that this small unknown stock started to become more attractive to the smart money.
Mm-hmm.
It jumped from a D to a C to a B, and then finally earned an A grade, signaling that it had acquired the key traits Wall Street looks for in a stock.
And what happened next?
A torrent of institutional capital poured in from heavyweights like JP Morgan, BlackRock, and Vanguard, igniting a 5,300% run in shares over the next few years. This is what it looked like in the stock market. It's one of the 10 best performing stocks of the past 5 years, yet practically no one's ever heard of it.
Yeah, it's absolutely stunning. I mean, that change in the grade, I think, seems to be the key component of your system, Louis. When a stock climbs from a D to a C, then to a B, and finally hits an A, it's basically announcing to the world, hey, this new company now meets the criteria that institutional investors crave. And having that information obviously gives you a tremendous edge. I am curious, how far ahead of the big money buying do you actually get the news?
Think of it like being dealt a strong hand in poker and knowing the other players are about to bet big. When the right conditions line up, it's almost inevitable that institutional money will follow. GeneDx is a perfect example. They're a genomics testing company so far off the beaten path that most investors don't even know they existed a year ago. As recently as last January, they were rated a D in my system, meaning Wall Street had basically written them off. But in April, over the span of just a few months, that pivotal moment we looked for happened.
Yeah, it had all the makings of a Wall Street darling once that grade changed.
Exactly. When the stock like GeneDx goes from D to C, then to a B, and finally earns a coveted A grade, it's like watching all the other players at the table ante up, and you know you've got the strongest hand.
Yep.
And that's exactly what happened in the case of GeneDx. Institutional investors flooded into the stock, triggering a remarkable 882% run in shares over the next few months.
We've been talking about all these incredible calls that your system has helped you make. And it's a funny thing that you just brought up GeneDx, because I couldn't help running a little experiment before we went on the air today. I did a little digging. I wanted to test your system, informally, sort of a blind taste test, if you will. And I looked up the top 10 best performing stocks last year. And you can see it on your screen now. These are stocks like MicroStrategy, which soared 513%. Summit Therapeutics went up 607%. And GeneDx, which you just brought up, climbed a mammoth 2,750%. I wanted to see if your grading system would have called these rockets before they took off. You see where I'm going?
Oh, that's interesting. I have to admit, I'm always up for a challenge. How'd I do?
Louis, it was like watching Babe Ruth call a shot. It's amazing. Almost every single one of these winners, each of which soared triple digits, mind you, was in fact highly rated by your system before their big runs. It could have gotten you into MicroStrategy, Summit Therapeutics, AppLovin, NewScale, Longboard, Dave Inc., Sezzle, Root, Intuitive Machines, and of course, GeneDx, which we just talked about. And these are monstrous gains. 500%, 800%, even over 2,000% returns, and your system flagged them early. I have to say, I am very impressed and a little jealous that I didn't have these insights a year ago. Where were you? Who knows? I could have been riding one of these rockets to the moon myself. It's amazing.
I appreciate all the kind words. I'm going to need a bigger size hat by the end of this interview.
You know what? Don't worry about it. We can widen the door frame for you to walk out. We have amazing producers here.
But seriously, I knew our performance metrics were solid, but it's always nice to get that kind of confirmation from an outside check.
Well, Louis, I mean, hearing about your system nailing those huge winners had my jaw on the floor. But that does raise another question, maybe a bigger question for me. Because we are living in an era where everyone is touting the latest AI-driven strategies, the latest, what do they call it, machine learning models, it's got to be harder for you to maintain your current edge when there's so many competitors out there that have access to these advanced data tools. So how do you do that? How do you manage to stay at the pinnacle of the game for so long, over decades?
That's a great question. It all goes back to what I call my first mover edge. I started doing serious data analytics on the stock market nearly 5 decades ago, long before anyone else on Wall Street cared about mathematical models, let alone had the computing power to run them. That kind of head start is incredibly difficult to replicate, no matter how advanced today's technologies might seem.
So you were analyzing mountains of numbers back when most analysts were just making phone calls and golf dates and lunch appointments, right?
Exactly. Back then, Wall Street was like an old boys club. Many analysts believed success depended on insider connections or schmoozing with CEOs. Very few people were mining actual data for patterns. I thought, why rely on hunches? Well, the numbers are right there, waiting to be found. Over time, I kept refining my models, drawing insights and lessons you can only learn from decades of trial, error, and iteration.
So in other words, your early adoption of data gave you a compound advantage.
Absolutely. It's like compounding interest, but in knowledge and expertise.
Right.
The longer you're at the cutting edge, the more you learn and the further ahead you get. That's why I've consistently outperformed for decades. I often tell people, if you see a transformative innovation like data analytics, be one of the first to jump on board, because being a pioneer creates a lead that latecomers usually can't overcome.
So it's the experience and the wisdom. It's not just about smart algorithms. It's about time spent in the game. When I think about the number of market conditions, all of the cycles that can happen and the anomalies you've seen, your expertise and experience came through.
Yes, precisely. When you're at the forefront of something revolutionary, you reap exponential benefits year after year. That's not just a lesson for the stock market. It applies to life, business, everything. Look at how Amazon leveraged data for e-commerce, or how Google used it to dominate online search. Tesla's doing the same in automotive with real-time data on driving behavior. These giants got in early, refined their methods obsessively, and built expertise no one else could match overnight.
You were one of the very first to apply this level of quantitative analysis on Wall Street back in the 70s.
Exactly. And that early start doesn't just vanish because new technology arrives. I've spent my entire career on the bleeding edge, constantly evolving my models as computing power grew, processing data faster, more accurately. More importantly, I know how to interpret that data in ways other analysts simply don't. Having better tools is only half the battle. Knowing how to wield them and having decades of context is what keeps me at the forefront.
Right. And it makes sense looking back on some of the accolades that you've received. I mean, that's why Steve Forbes, the famous businessman, said of you that Louis Navellier has had a most enviable long-term investment record. New York Times called you an icon among growth stock investors. And in his seminal book, Secrets of the Investment All-Stars, Ken Stern referred to you as number one, a man who has beat them all.
It's incredibly humbling, but yes, experience matters.
All right, so let me change gears slightly, just slightly, Louis. We've talked so far a lot about finding those hidden gems, right? Those smaller, lesser-known companies that suddenly springboard into the big leagues. But I just want to point out, your system's magic isn't just one-dimensional, is it?
No, it's not. It's not just about chasing the next rising star. Our system is designed to provide clear indicators for both entering and exiting positions. High grades help investors find promising stocks before everyone else catches on, while low grades help them avoid or exit investments that are likely to underperform.
Exactly where I was heading. So we're talking about avoiding huge losses by jumping ship before the stock takes a nosedive. That is something that every investor would appreciate, whether you're managing your own retirement account or a billion-dollar hedge fund. That's huge.
That's where we've seen some of the most dramatic value. Look at Boeing, for example. For decades, this company was seen as a paragon of reliability, a cornerstone of the American industrial complex. Investors treated it as a no-brainer. Set it and forget it. But then came cost overruns, quality lapses, and safety concerns that shook investors' confidence. The slide in Boeing's stock price blindsided a lot of shareholders who had grown complacent.
Yeah, I remember that. It felt like overnight sentiment just completely flipped. People who thought they were safely tucked into a big blue chip name, they got hammered. Really painful stuff.
Painful indeed, but here's the thing. My system saw warning signs long before the major headlines and panic selling. We caught subtle shifts in how institutional players were positioning themselves. For the big money managers I work with, that early signal could have saved them millions of dollars they might have otherwise lost. For retail investors, it could mean thousands saved, money that can be preserved or redirected into more promising opportunities.
Yeah, and that is so huge. I mean, it's not just about getting rich off the next high-profile stock. It's about protecting what you've already built, what you've already earned.
100%. I'm sure you remember the post-COVID shock mania, Chris. Stocks like Peloton, Zoom, Teladoc, and Carvana soared on a wave of stock market euphoria. Institutional money was piling in. The media was gushing. It felt like the party would never end.
Yeah, that's very true. I remember it. It was a wild time.
Everyone thought these stay-at-home winners would just keep climbing. But no matter how solid a company looks in the moment, when the big money suddenly shifts gears, the bottom can drop out fast.
And that means a lot of regular folks out there are left holding the bag, right?
Unfortunately, yes. Many retail investors only see the headlines and the hype. They don't catch when the institutional sentiment turns. That's where my system comes in. It picks up on those subtle warning signs, helping me recommend that you get out before the music stops. Peloton, for instance, was downgraded to a D status long before the meltdown. So was Zoom, Teladoc, and Carvana.
Yeah, if only more people had had that kind of insight back then, millions of dollars could have been saved. Instead of riding that wave all the way to the crash, they could have stepped off just in time.
That's where the real power is, empowering investors to steer clear of costly mistakes.
Right, and in that particular sense, Louis, it seems that the low grades are just as important as the high ones. Because with that kind of insight, you're not just helping people chase the gains. Again, you're helping them keep the gains that they've already gotten.
That's right, Chris. Early signals, better decisions, fewer regrets. Let me share another angle. My system doesn't just help you avoid losses. It can also help you determine when to get back in.
Oh, really? Tell us about that, Louis.
Let's take another look at Carvana. After that massive post-COVID collapse, they started serious turnaround efforts, cutting over $1 billion in costs and introducing new AI-driven tech to speed up vehicle reconditioning. My grading system caught those shifts and flagged Carvana as a B in late 2023, well before the story hit the headlines, and the smart money fell in love with it all over again. Since then, shares have climbed as high as 899%.
Right. That's terrific. So in Carvana's case, the system recognized the potential impact of their turnaround initiatives before most other investors did.
Precisely.
All right. So think about the practical implications of that. You could have sold near the top. You could have pocketed your gains, obviously, and then scooped up shares again at a much lower price once those fundamentals turned around. So that's, again, not just minimizing losses, that's setting yourself up for massive gains on the rebound. So that's terrific for regular folks out there with Wall Street connections or sitting at home trying to build a retirement nest egg on their own. That's got to be a breath of fresh air.
I sure hope so. Traditionally, retail traders were at a huge disadvantage. They didn't have the tools, the team of quants, the resources to dig in to the market's underbelly. That's ultimately why I'm here today. The same analysis that gives institutions an edge can also level the playing field for regular folks. With this kind of research, you can skip the noisy guesswork and start making more informed, data-backed decisions.
Right. Okay. So, Louis, I am impressed, really. I am. But let me play devil's advocate for just a second here, okay? Because the way we talk about it, you make it sound like this system is some incredible magic wand. But you don't get it right every single time, do you?
Oh, absolutely not. No one does. And if anyone tells you they do, run the other way.
Okay.
There's no system on earth that nails every pick. But here's the thing. I've been refining this method for over 40 years, always staying ahead of the curve with analytics and technology. That compound advantage, decades of data, constant iteration, gives me an edge that few have. Still, even with that edge, it's not about guarantees. But what it is about is stacking the odds heavily in your favor.
Right.
When you look at any of my performance metrics, the pattern is clear. A-rated stocks have historically outperformed B-rated stocks, which outperform C-rated stocks, and so on. Over the long term, this isn't guesswork. It's a statistically significant pattern. The grading system works.
It really does. So it's basically turning what could be a guessing game into a very calculated strategy.
We're shifting the game from hunches and headlines to measurable signals. It's not about being perfect. It's about being consistently being better than random. Over time, that difference can translate into substantial gains and fewer costly mistakes.
All right. So, Louis, I've been looking at this chart that you've put together, and there is one part that catches my attention, and it's the C-rated stocks. To me, they're not doing as poorly as I would expect. In fact, they seem to track pretty closely with the stock market average. Am I right about that?
Exactly. And that's a fascinating revelation. If you just invested in the C-rated stocks, you'll likely match the overall market's performance over time. It's not bad, but it's also not exciting. C-rated stocks give you market-level returns because, on balance, they're not terrible companies, but they're not exceptional either. Again, what my system allows us to do is to identify the outliers, the A-rated stocks that consistently outperform. When you focus your investments on these top-tier opportunities, you're not just riding the tide, you're positioning yourself for exponential growth.
You know, it just occurred to me, it's like you're moving from playing defense to offense. Right now, most people just settle for the market average because they don't have the tool. I don't have the tools, to go any further than that. But with the right data, and by that I mean your system, they can tilt the odds in their favor.
Yeah, your best defense is a strong offense. Just think about this. If you can just avoid the underperformers and focus on A-rated stocks, your chances of beating the market go up dramatically. And remember, those A-rated stocks often start as B or even C-rated stocks.
Right.
The magic is spotting them right as they're making the leap.
Which is why this is not just a revelation. This is really a call to action here. If you do have the tools to do better than average, why would you settle for anything less, right?
Average is fine if you're content with mediocrity. But if you want to outperform, if you want to build real wealth, trusting the data is the key to unlocking that next level.
There we go again. Data over hype. That is huge for any investor that's looking to maximize returns. And speaking of big returns, Louis, the next Nvidia. We're all waiting. We're excited to hear about all of that. Can we dive into that right now?
I know. Everyone's dying to hear what my next big pick is. Trust me, I'm excited to share.
Good.
But before I do, there's just one more incredible aspect to my system that I have to share. It's important to understand this because it's related to my new pick. It's about spotting major market trends, Whole sectors ready to explode.
Okay. Well, let's unpack that. We'll call timeout on the next Nvidia here. We got another teaser, so let's hear it. What you got?
Let's think back to 2024. If I asked you which sector dominated, you'd probably say AI or something in tech, right?
Yeah, you read my mind. AI was all the rage.
Sure, AI crushed it. But do you know what one of the top performing sectors was last year? Banking stocks.
Banks? Are you serious? That's about as exciting as watching paint dry. Banks.
That's one way to look at it. But again, my system doesn't care about public perception. It doesn't care what a business does or what the sector is in, as long as the smart money wants to buy it. And in early 2024, a wave of upgrades hit dozens of these banking stocks. See how the grades shift from C's and D's to B's and A's almost in unison?
I do. So they all turned bullish together?
Right. That told us the big money was shifting large amounts of capital to this overlooked sector. Yet most retail investors had no clue.
Wow.
But many of these hidden gems went up by amazing amounts last year, like First Savings, Investar, OP Bancorp, and Bank 7.
Yeah, this takes me by surprise. I had no idea. This is like finding a hidden corner of the market that no one else is paying attention to.
That's my point. While the media was mesmerized by AI, many of these humble regional banks quietly outperform even the tech-heavy NASDAQ.
That's absolutely astonishing to me. I had no idea.
By grading the quality of literally thousands of businesses, we can spot where Wall Street's interest is about to surge, whether it's a standout stock or an entire sector. The ability to spot broader trends forming in the market is what enabled me to get in front of the big market moves like Black Monday in 1987, the dot-com crash in 2000, the financial crisis in 2008, and more recently, my system identified the stay-at-home stock boom in 2021, the energy trade in 2022, tech stocks in 2023 and 24. Of course, all investments carry risk, and past performance does not indicate future success. You should never invest more than you can afford to lose.
Well, I got to say, Louis, the more we're hearing, the more impressed I am, not only individual stocks, but entire sectors here. So it's clear you do have a knack for spotting those massive emerging market trends before they go mainstream the same way that you can individual stocks.
That's why I wanted to share this aspect of my grading system with you, because now my system is lining up again with something big, a sector I believe could create incredible wealth opportunities for those who get in early.
All right. Well, I know everybody right now we're on the edge of our seats waiting. So let's jump into this right now. I want to talk about the new opportunity that your system has uncovered.
Absolutely. Our system has been buzzing with signals lately, and I'm convinced we're staring at the next seismic shift in technology, namely quantum computing. If you've ever heard of it, or if you're only a little bit familiar with the concept, don't worry. All you really need to know is that quantum computing provides seriously advanced computational power, far beyond what any of our current supercomputers can handle. Google's new quantum chip, for example, blew past expectations and showed just how fast this technology is advancing. It handled some calculations in minutes that today's most powerful computers would need decades to complete. Wow. My point is, quantum computers are a completely different animal compared to today's very best computers. And we're getting very close to a point where quantum computing will be a must-have tool for businesses across every sector. If you're not using it, you're going to fall behind. This could mean breakthroughs in drug discovery, financial modeling, artificial intelligence, logistics, and so much more. When you think about it, any task that involves sifting through massive numbers of possibilities or data sets could be supercharged by quantum computing. And now the institutional money is starting to take notice. The prospect of reshaping entire industries has Wall Street's biggest players chomping at the bit. They know that whoever can first deliver practical quantum computing solutions will likely become a global leader. I'm convinced it's going to ignite a new wave of massive wealth for the early investors who claim their stake now. And yes, I have a specific stock in this arena that my system is giving top marks.
All right. If we could have a drum roll, please. Here we go. Moment of truth. Go ahead.
In the world of traditional computers, we know that Nvidia is the go-to name for the specialized chips that power everything from gaming to AI.
Mm-hmm.
Well, a company called IonQ is playing a similar role in quantum computing. They're developing the cutting-edge hardware, the chips and systems, if you will, that could drive this entire revolution forward, except that they're much earlier along in their life cycle than Nvidia. The beauty of IonQ's technology is that it's designed to harness quantum technology in a way that makes quantum computing more reliable and scalable than we've seen before. And remember, once quantum computing really hits the market, it's going to be a race. Businesses that adopt it first can leapfrog their competitors. That's why I see IonQ in a position very similar to Nvidia a few years back, providing the essential tech everybody else will need to keep up. And here's the kicker. As IonQ redefines and commercializes its solutions, we could see explosive growth for anyone who's in early. This is exactly the kind of potential that gets my system excited. Because if IonQ truly establishes itself as the go-to hardware provider in quantum computing, it could become a household name in tech. Think of how Nvidia started out as a niche GPU maker before exploding into the mainstream once everyone realized they needed its chips for gaming, AI, and data centers. IonQ is on a very similar path, but in a space, quantum computing, that many believe will dwarf previous tech revolutions. And remember, the investors chasing this opportunity aren't talking in millions or even billions, they're talking in trillions. So if you're looking for a company that could help you shape the future of quantum computing and potentially deliver major returns along the way, IonQ is one to watch very closely. The smart money is starting to take notice. Institutional investors like Morgan Stanley, BlackRock, State Street, and even Amazon have recently acquired significant positions in the company.
All right. So there you have it. Ladies and gentlemen, some valuable insight from one of the best in the business. IonQ could be the next Nvidia. Louis, it sounds like a remarkable opportunity. Could very well be one of the best ways to tap into this next area of the computing revolution that you just mentioned. Let me play devil's advocate one more time. What if IonQ doesn't become the dominant player?
Great question. Yes, even a promising company can stumble.
Mm-hmm.
If IonQ fails to keep hitting my data points, you'll see the grade drop and you'll know to exit before losing big.
Okay.
Conversely, if IonQ surpasses expectations, the system might upgrade it further or find additional quantum computing companies worth buying.
Right. And that's where your grading system comes in. It seems like it's the real prize here in a way, because it's going to keep everybody updated on the state of the company, the sector, any changes that are looming on the horizon. Am I right about that?
Absolutely, Chris. If you've been waiting to catch the next big wave of tech wealth, IonQ could be your ticket. But I want everyone to understand, if you're making these moves without reliable data, you're essentially flying blind.
Right.
My grading system was created to do one thing: cut through the noise and show you in real time how the fundamentals stack up. Is the stock still meeting expectations? Is the market sentiment shifting? Is the institutional money buying or selling? All of that gets measured, weighed, and processed by my system.
Right. And it is that steady flow of information that can make all the difference, right? I mean, things can change so quickly, especially with cutting edge technologies like quantum computing.
That's it. Trusting the data is the single most important factor in investing success. Markets move on new information. Stocks rise and fall on fresh insights. If you don't have a system to keep you informed, you're always playing catch up. Professional investors play with a completely different set of rules and resources than most individuals investing from home. That's how the rich stay richer.
Mm-hmm.
This information gap is exactly what I want to close for anyone watching today. That's why starting right now, I want to give our viewers access to my grading system called Stock Grader, so they can see exactly what we see when we see it.
And I knew that's where you were headed. This is huge, Louis, because let's face it, a big part of the anxiety that people feel about investing is not knowing what's going on day to day. Can you take a moment and just walk us through how you plan to give folks this inside look, sort of a day in the life of Stock Grader?
Oh, absolutely.
Okay.
What I'm offering is a gateway to the kind of analytics, data points, and real-time alerts my own team and I rely on. It's like having your own personal research department there to inform you about the most critical shifts as they happen. You'll know when IonQ or any stock on our watch list shows signs of acceleration or if the fundamentals take a turn. With this system in place, your decisions become proactive instead of reactive.
And that's perfect. That's better than what I said earlier about going from defense to offense, because that sounds like the real game changer that anybody who's wanted an edge in the market could have here. No more guesswork, no more day late news. Now, one thought, I know you created this tool for professionals, institutional professionals out there. So how accessible is it going to be for somebody out there who's just doing this on their own and investing alone?
Great question. I built this system with everyone in mind, not just data wizards and quants. Sure, under the hood, there's some very sophisticated technology at work,
Right.
advanced mathematical models, algorithmic analytics, and all of that. But the user interface is designed to be completely intuitive. It's as simple as logging in, inputting the stocks you're interested in, and letting the system present the data in clear, straightforward terms. A user can glance at the grades and decide whether a move is warranted or not.
And that's what I wanted to hear. I love it. It's kind of like a sophisticated search engine, right? Like you said, underneath the hood, there's this insanely complex engineering. You've got thousands, I don't know, maybe millions of lines of code and cutting edge hardware and advanced software that would go over my head. But all we see as users is this nice, crisp, clean screen, couple of icons. We tap and we're ready to go.
Exactly. The interface strips away the complexity. So all you see is what you need to act on. It's one of the reasons the system is now so popular among management professionals. Most of these guys are not math whizzes. They don't have time to tinker with complicated dashboards. They want something that can give them the bottom line on the next big potential winner with just a few clicks.
Right. So in essence, you're inviting folks to sort of look over your shoulder. They're going to see what you see, the same easy to follow signals that you're monitoring on a daily basis.
Exactly. That level of transparency is what gives smart investors the confidence to act. Just type in a ticker, see its grade, see its history, and instantly know if the big money is about to flood in or if it's time to get out. My system is built on the principle that knowledge is power. That's why I'm doing this. If we can democratize that knowledge, even just a little bit, it could mean a world of difference for everyday folks looking to tap into groundbreaking opportunities like IonQ. That's what my system does. And that's why I'm so excited to offer it to a much wider audience.
And I can already imagine the difference that this is going to make for so many viewers out there. Folks, if you have ever wished that you had a secret weapon in the market, this may just be it. If you can read a grade school report card, you can tap into one of the market's most powerful forces before everyone else does. And Stock Grader, Louis, is just the beginning. Am I right?
Oh, that's right. When you join me, you get immediate access to my proprietary Stock Grader, no PhD in data science required. But I'm also including a set of must-have investment research reports. The first one is a high-level, hedge fund caliber report on the entire quantum computing space called the Quantum Revolution, the next household names in tech. This report highlights why quantum computing is shaping up to be the most significant technological leap since the internet and how you can position yourself ahead of the crowd. It features a full high-level write-up on IonQ, one of the most promising players in quantum computing right now. You'll also find several other high-scoring quantum computing plays my system has flagged.
Right. So, Louis, let me just make sure it's important for viewers to look beyond just IonQ.
100%.
Okay.
IonQ is an exciting company. However, this market is still evolving. Based on my experience, in any given year, one or two won't pan out or will run into some type of trouble and we'll dump them in a few months. A half dozen will do very well. And then we'll have a group of 2 to 3 that blow us away and become the next big winners. I feel very comfortable saying the next big 1,000% winner, maybe even 2 or more, could come from this group. But it's impossible to know exactly which one it will be.
Sure.
Maybe IonQ or maybe one of the other companies I've revealed in this report.
Right. So actually, it sounds like you're recommending that we treat this or think of it as a sort of a diversified basket.
That's exactly right. My grading system is bullish on IonQ, yes, but there are others in the quantum computing space with equally compelling or complementary advantages. If you put all your chips in just one company, and if something goes wrong, you'll miss out on the other big runners. In a frontier industry like quantum computing, there are just too many variables. Just remember, this is how the big boys invest. Buy the best companies, let your winners run, and sell any losers pretty quickly. And that's the key with emerging technology investments. This is how you stack the odds heavily in your favor.
Right. So gather your short list of high-scoring quantum computing plays, and this report that you just mentioned highlights those, and then keep a close eye out for other developments.
That's it.
Okay.
Be ready to sell quickly if something doesn't pan out, and be ready to double down on the stars that show real results. I've laid out every last detail in my report. I want everyone watching to have it. But before I show our audience how to claim their copy, there's one more critical piece of intel I like to pass along. It's about AI.
Right. Okay. Well, probably nothing more top of mind than that in the world today.
That's right. You see, for a while now, investors have poured capital in what we call the AI enablers. These are the companies building out the infrastructure, like chip makers, data centers, and cloud providers.
Right. Stocks like Nvidia, Microsoft, Supermicro.
Right. But my system is showing that the tide is beginning to turn. We're starting to see a massive shift towards businesses that are adopting AI rather than just enabling it. That's where the new money is beginning to flow.
Mm-hmm. And why do you think that's so important?
In the simplest terms, it marks the beginning of a critical shift in the adoption of the technology. We're talking about companies integrating AI into every corner of their operations.
I see. So this is sort of the moment when AI stops being an abstract idea and starts becoming a practical utilitarian tool for businesses and governments and everyday people.
It's huge. This is where the real growth begins, because it means AI is no longer a specialty. It's now a necessity.
Right. Well, what does it mean exactly to be an AI adopter? I mean, how's that different from an enabler?
Great question. One good example is a senior living stock that my system recently flagged. This company implemented an advanced AI monitoring system designed to detect early warning signs of potential issues. Things like unusual movement patterns, changes in vital signs, or even subtle shifts in behavior. One of its standout features was preventing residents from falling out of their beds. Within months, they saw a 46% reduction in falls. Now, why is that significant? For starters, it drastically reduces the costs associated with emergency medical care, hospital visits, and rehabilitation services, expenses that can quickly add up for both the facility and its residents.
Right. So it's a huge cost saver.
Yes, but the impact goes much deeper than that. Fewer falls mean residents can live longer, healthier, and more comfortable lives. Families feeling more at ease knowing their loved ones are being cared for in a safe environment. And happy, healthy residents are more likely to stay, boosting retention, reputation,
And revenues.
Precisely. The facility's ability to leverage AI not only cut costs and improved its services, but it also enhanced its profitability. Investors took notice, and shares of the company soared as much as 271% as the market began to understand the potential of AI in this space.
Wow, that's nice. That is a remarkable story.
And that's just one example of many.
Right. So in other words, the real growth story isn't just in the hardware or the technical underpinnings anymore. It's in the broader adoption, to use your word, right?
Absolutely. Examples like this senior living facility are becoming more commonplace across multiple industries. Yet most people can't spot them like I can because they don't have the data. When AI moves into widespread adoption, it's going to fundamentally change how industries operate. It's not just about doing things faster or cheaper. It's about doing things in ways we never imagined before. Think back to the late 1990s, when the internet went from a novelty to a necessity almost overnight.
Mm-hmm.
Over the 2010s, when smartphones went from luxury items to everyday essentials. That's exactly the kind of massive, culture-shifting leap AI is about to make. Now that the groundwork has been laid out, we're talking about millions of businesses integrating AI into their operations. Healthcare, finance, travel, marketing, sales, manufacturing, you name it. What's coming will be a seismic shift.
Yeah, it's going to happen everywhere. So the adoption of AI is no longer, it's not an experiment for companies anymore. It's actually delivering real and significant improvements to their bottom lines.
That's right. If you believe you missed the boat on AI already, I'm here to tell you the party is just getting started.
I have to say, the work that you're doing, Louis, is so important on a number of levels because you're not just helping investors out there navigate this shift. You're giving them a front row seat to what is happening before the rest of the world catches on to it all. That's huge.
That's what my system is designed to do. Most people won't see this coming until it's already happening.
Right.
But the early signs are right there in the data in black and white. This is the moment where the money starts flowing towards the adopters. And if you can position yourself ahead of that shift, the opportunities are extraordinary.
And I got to add one more thing here. This isn't just about making money. It's about, and this may sound a little pie in the sky, but this is about understanding the future, where we're headed as a race. You know, the companies adopting AI are shaping how we're going to work, how we're going to live, how we're going to interact with each other and the rest of the world. This is really big stuff.
Exactly. The implications go far beyond the stock market. This is about societal progress,
Right.
economic evolution, and even the jobs of tomorrow.
This is a great time to be alive, you know, because it sounds like we're on the cusp of something truly transformative.
We are. And that's why I put together a brand new report on this next phase of AI adoption called The Great Proliferation, the next phase of AI. It dives deep into the 7 essential companies my system has flagged, the ones I believe are best positioned to benefit from this tidal wave of change. I'll show you where the real opportunities lie before they hit the mainstream. This isn't just important, it's essential for anyone who wants to stay ahead of the curve. When you join me today, you'll get access to this crucial research along with my report on the best opportunities in quantum computing and, of course, full access to my stock grader.
So, Louis, that's a very comprehensive set of resources there. Easy to see why you've been able to help so many people stay on top and stay in winning trades. Good stuff.
I've done all the heavy lifting so you know which opportunities to keep an eye on right now. And before we wrap up, there's one more thing I want to give to our viewers. We'll need to stay in touch. You'll need to stay up to date on all the new developments taking place and have the chance to be the first to act on them as they happen. That's why I also want to include my flagship investment newsletter, Growth Investor. Each month in Growth Investor, I dig into the current market conditions, recommend one or more new A-rated stocks, and provide updates on existing recommendations. You don't have to second guess or comb through complex financial statements. Growth Investor does it for you. If a stock we're tracking drops from an A to a C, you'll know. If a new star emerges, you'll see that too.
All right, so this, Louis, is great. And just so I'm following here, you can either get very hands-on and analyze stocks week to week in StockGrader, or you could rely on your monthly guidance as sort of a shortcut to the top picks only.
Exactly.
Okay.
Some people love diving into the data themselves, scanning dozens of tickers in a week. Others prefer to have me deliver the top-ranked stocks right into their inbox. That's where Growth Investor comes in. Every month, I detail the highest graded stocks, why they scored so well, and how I'm playing them.
So this is perfect for busy people out there who just don't want or can't, devote hours to sifting through 6,000 plus stocks on their own time, right?
Right. Not everyone wants or has the time to research every detail. With Growth Investor, I distill everything into actionable steps. You get regular updates, insights on market conditions, and timely alerts if anything changes with the stocks I've recommended.
Right. So again, for any of you who love being hands-on, the Grader is a real-time tool that you can consult week to week. But if you want, call it a curated experience, and you want to get Louis' team's top picks delivered monthly, you can rely on Growth Investors. It's the best of both worlds. You got options.
Exactly. It all boils down to what's best for each person's style. Whether you're a do-it-yourself type who wants full control or someone who prefers expert guidance, these two resources complement each other beautifully. You can dive deep into the numbers yourself or simply follow my monthly picks, or do both. It's entirely up to you. In other words, I want to keep you informed every step of the way, making sure you have all the information you need to invest with confidence. That's the whole point of Growth Investor, combining the power of my grading system with my ongoing guidance so you never miss a key opportunity or get blindsided by a sudden market move.
Louis, I don't think there's any denying just how powerful a tool like this can be, especially in today's market. I mean, the major indexes keep climbing higher almost weekly. There probably couldn't be a better time to have access to this kind of information, really.
Oh, absolutely. Every day I hear from people who want to jump in but aren't sure how or where to find the best opportunities. They're scared of missing out, but they also don't want to pick a loser.
Right.
Meanwhile, they're missing out on some of the market's best opportunities. That's where my system can help.
Yeah. And here's the kicker, folks. With Louis' guidance through Growth Investor, you're always going to know what moves to make. He's not offering a one-off tip here. He's giving you ongoing support so that you can stay one step ahead of everybody else out there. Louis' A-rated stocks have crushed just about everything else over the past few decades. It's basically like having a personal team of analysts watching your back, something most investors can only dream about. You can do that. You can ride shotgun with them while they're doing this. So if you're serious about capitalizing on this bull market, I don't think there's any better place to start than with Louis and his system. And here's the truly exciting part. We've been saving this. In the past, Wall Street pros have paid Louis up to $30,000 a year for direct access to his system. Today, he's making his elite level research more accessible than ever. And for a limited time, you can get a full year of access to Louis' system, hang on to your hat, for just $99. That's a fraction of what the insiders used to pay.
Thanks, Chris. I meant it when I said it. I want to level the playing field.
Yeah.
One more thing I want our viewers to know about me. I've spent over 4 decades refining my research, and I'm absolutely passionate about helping people achieve real success in the stock market. I want you to feel that same excitement and confidence about the opportunities ahead. If for any reason you're not thrilled with what you receive, then I don't want your money. My rule is simple. If this isn't the most valuable and insightful investment research you've ever encountered, just say the word. You have a full 3 months to decide. And if at any point you feel it's not living up to your expectations, I'll give you a prompt, no-hassle refund. I make this guarantee because I know the power of the system I built, backed by the thousands of people who continue to follow it year after year. But if you don't agree it's worth every penny, we'll simply part ways with no hard feelings. That's how I believe business should be done. I'm confident the moment you see how my research clearly steers you towards the market's best opportunities, you'll understand why I stand behind it 100%. After all, my mission is to put you on the path to something greater, and I'm ready to prove it to you.
Louis, that kind of faith in your research is actually very refreshing. It's clear you're not just promising results, but as you said, you're standing behind them 100%.
Look, I come from humble beginnings. My father was a bricklayer and my mother a secretary. So I know firsthand how precious every dollar can be. Growing up, I saw the difference a little extra money could make for a family living paycheck to paycheck. That's why I insist on a full 90-day money-back guarantee. If I can't help you get closer to your goals, I don't deserve to keep your money. It's as simple as that.
Louis, that's a remarkable story. I appreciate you sharing that. And what a gift it is to be able to try something for a full 3 months, knowing you can get every penny back if it's not right for you. Because you're basically saying, here's a roadmap to potentially transform your financial future. Test drive it for 3 months. And if you're not blown away, walk away with all your money refunded. So folks, if you're ready to get started, it's very simple. If you're ready to receive access to everything that we've detailed here within a matter of minutes, all you've got to do is click on the link that you see on your screen right now. That link will take you to a secure order form, and you can review there everything before actually submitting your order. And you'll also notice that Louis has generously included a few bonus items as part of this research package. So be sure to check out those as well. Thank you for your time. And before we do anything else, Louis, how about some final parting words from you? Anything you want to say?
I'd like to say thank you so much for taking time out of your busy schedule to listen to my message. I know your time is valuable, and I truly hope I've been able to provide something meaningful and worthwhile for you today. This is more than just an opportunity. It's a journey I wholeheartedly believe in, one that I'm confident will transform the financial lives of millions of forward-thinking Americans over the next few years. I strongly encourage you to continue on this path with me. Together, we can navigate this exciting landscape and uncover opportunities that could redefine your financial future. Thank you once again, and I look forward to being a part of your success story.
Well said, Louis. And folks, it's time to get started and receive access to everything that Louis has detailed here in a matter of minutes from now. Just click on the link that you see on your screen. It will take you to a secure order form, and you can review everything there before submitting your order. On behalf of Louis Navellier and myself, thank you for watching. So, Louis, one thing that I've noticed about your system is that it doesn't necessarily focus on getting into a stock at its IPO or even immediately after it goes public. But isn't that when you can make the biggest gains, traditionally, buying in at the very beginning?
That's actually a common myth in investing. Sure, there are folks who glorify getting in at ground level, but the reality is that too early can be just as risky, if not more. Let's look at some of the biggest success stories. Amazon took years to become profitable. Monster Beverage had its own rocky path. Netflix and Nvidia made plenty of mistakes in the early days. If you bought in right at the start, you have had to ride out a ton of ups and downs, often tying up capital you could have put to better use elsewhere.
I see your point, right. So there is such a thing as being too early.
Oh, absolutely. My system targets what I like to think of as the Goldilocks zone, that sweet spot where a company has just started getting everything dialed in. They've ironed out the kinks, found a repeatable formula for success, and the market is rushing to buy their products and services. At that stage, they're still growing rapidly, but they're no longer fumbling through those early trial and error phases. When you look at some of my biggest successes, you'll see that they often fall into that sweet spot of not too early, but not too late. just before the institutional investors get excited. Monster Beverage, Booking, Amazon, Netflix, and Nvidia.
Yeah, the Goldilocks zone. So it's not about being first. It's about identifying when a business has hit its stride.
Exactly.
Okay.
There's nothing more powerful than a business that's figured out its model and is scaling efficiently. That's when you'll often get the most significant, sustained gains in a stock. My system's grades guide us to those companies right at the moment they hit that dialed-in stage. Not too early, so that you're waiting years for growth to materialize, but not too late, that you're chasing after the big gains that have already been made. That is what Stock Grader is all about, maximizing potential returns without taking on unnecessary risk.
All right. So you've got a grading system with an extensive track record that definitely turns guesswork into strategy. Now, one thing I'm thinking is that it's got to be a lifesaver for anybody out there eyeing up a new stock. I mean, especially given how easy it is to get swept up by all the hype out there nowadays. We talked about that.
It really is. It can be tough to resist when you see headlines proclaiming a stock is the next big thing.
Mm-hmm.
Take C3 AI, for example, a company surrounded by the AI buzz in recent months. Their ticker symbol is actually AI, which naturally fueled the hype. Articles everywhere were saying it could be a multi-millionaire maker stock, so that you can imagine how many people wanted to jump in.
And I remember that frenzy. I mean, there were some that were calling it the ultimate play in artificial intelligence. But how did your system rate it?
Over the last 12 months, C3 AI has mostly earned D grades in my system. A clear warning that the fundamentals and institutional signals weren't lining up favorably. Remember, that's your cue to stay away, no matter how seductive the media buzz might be.
Again, so despite all the hype, your system said, no, we want data, not hype. Now, what happened to the share price?
It validated our data. Shares have struggled to get off the ground.
Mm-hmm.
Hype alone can't prop up a stock for long if the fundamentals aren't there. That's exactly why my grading system is so critical. It cuts through the noise and looks for the real substance.
And that makes sense. So if someone just checked the grade and saw that it was consistently a D, how easy. They could have just saved themselves the heartbreak.
Yeah. Think of it as your reality check. No matter how exciting a stock sounds, if the grade is consistently poor, chances are you're looking at trouble down the road.
Mm-hmm.
It cuts through the storylines, press releases, and excitement, and just looks at the numbers and fundamentals.
Okay, let's talk about another scenario that I know a lot of people experience, and I'm talking in some ways about myself here too. You buy a stock, starts climbing. Let's just say, pick a number, 50% in a few months, it's up. Fantastic situation, but now you got a new dilemma. Do you cash out and lock in profits, or do you hang on for a potentially bigger gain? I mean, your system helps people navigate that kind of good problem as well, doesn't it?
That's a great point. Being up 50% in a few months definitely feels like a win, and it is. But it can also make you second guess your next steps.
It does.
Do you take the money and run or keep holding? This is exactly why my system doesn't just help find great stocks. It also shows you when to hold on to them. A prime example is AppLovin, which we talked about a little earlier.
Uh-huh.
Its performance last year caught many people by surprise. It surged 100% in the first 6 months of the year. Now, if you got in early and saw that kind of gain, you might have been tempted to sell it because, hey, 100% is still a very big win.
Exactly. That makes sense. Nobody wants to watch their gains evaporate if the stock suddenly dives, and it can. So it's so tempting to just take money off the table, at least some of it.
Yeah, but here's the thing. My system was still grading at an A at that time. That's how we knew the stock still had room to run. And that's exactly what happened. By the end of the year, AppLovin was up an incredible 800% from where it started. If you had sold after that first 100% jump, you'd have left some serious money on the table.
No kidding. In fact, let's do the math on that for just a minute. If you had a $5,000 initial investment at the start of 2024, you sold after 100% gain, obviously you'd have turned $5,000 into 10, which is great. If you had stuck with it until it was up 800%, that same $5,000 would have soared to $40,000.
Exactly. That's the power of having a system that not only tells you which stocks to avoid, but also which stocks to hold so you can capture those truly incredible gains.
Yeah. Well, look, I can't think of a better testament to your system's value than that. And that's how you've managed to stay at the top of your game for so long, better than 4 decades now. You don't just dodge the losers, you find the winners, and then you make sure folks stick with them. Louis, you are clearly excited about the quantum computing revolution. That's obvious. But what do you say to people out there who think we're still too early for that opportunity? How do you respond to that?
Well, first off, it doesn't matter what I think. What matters is what the data says. And my system is very clear. The smart money, the institutional investors who move markets, is about to pile in. Remember, my system isn't based on speculation or guesswork. It's designed to anticipate the biggest financial moves from these insiders. And there's another layer here. These institutional players are incredibly well connected. They're constantly speaking with top engineers, executives, and thought leaders in cutting edge fields like quantum computing. Few people have their fingers on the pulse of technology megatrends like they do. And by tracking their actions, my system doesn't just follow the money, it follows the experts who are driving these breakthroughs.
Right. So your system is essentially a bridge between the money movers and the innovators.
Exactly. It's like having a direct pipeline between the tech visionaries building tomorrow's breakthroughs and the deep-pocketed investors who can make them reality.
Right.
That's why data is so powerful. Look, anything can happen in the markets, but I've seen these kind of scenarios unfold too many times to ignore it. Yes, we are early, but here's the thing. In my decades of investing, I've learned that the biggest gains are made by those who act before any opportunity becomes obvious to everyone. By the time the crowd catches on, the big moves are already behind us. If you're watching this right now, you're among the few with early access to the quantum computing story, and in my humble opinion, the best data system available to track it. Why wouldn't you take advantage of that? If you move on this now, especially with the market in a bullish phase, the potential is staggering. But if you wait, you can miss out. It's really quite that simple.
I'm going to repeat that question that Louis just asked. Why wouldn't you take advantage of that indeed? Folks, that officially brings an end to our special presentation. Once again, thank you so much for taking time out of your busy schedule to join us. And if you would like to continue on this amazing journey, exciting journey with Wall Street icon Louis Navellier and navigate this exciting landscape together with him, riding shotgun with him, click the link on this page. That's all you have to do. And you'll be directed to a secure order form where you can review all the details before finalizing your purchase. And as a special addition, Louis has also thoughtfully included a few bonus items with this research package. On behalf of Louis Navellier and myself, thank you for watching.